I'm going to start the recording. And there's this thing here. It's like there's a thing I found on how to, like an options 10-point checklist, right?
Okay.
So maybe these are things you're covering. Trading plan, news,
Okay.
sanity check, expiration, you know, the calls and the puts. And I guess the thing that confuses me the most is the strike price, because what I've seen, what I've observed from a few of the people who are successful with options, including yourself, is like the strike price is not much different than, there's not much variation in what the current mark is, right?
Yeah.
So let me see, there was let's mute everyone, please.
All right. So I'm gonna go on the computer, all right? So I'm gonna hang this up. Okay.
Yakubu, go ahead and unmute. I accidentally muted you. All right, so I had a options. I had a thing that showed a really good graphic of how the expiration time worked, right? It's that little kind of chart that shows the red and the green line and the, you know, where it crosses over and stuff. If I can pull it, if I can find it again. Here. So let me put that away, make that a minimum. So, you know, this illustration here, let me see if I can. This illustration here is supposed to show, you know, time. And, you know, I guess I don't know how to read this.
Yeah, so this one is basically, you know, options have two sides. And whenever you go on the option chain, all the time on your, what's the name, looking from here on my left-hand side, the calls are always on the left-hand side. And then on the right-hand side.
Hold on a second. I'm going to let you present, because right now I'm presenting. So stop share and you go ahead and share your screen.
Okay, 1 second.
And thanks for this, by the way.
Host disabled screen sharing. You said you disabled the screen sharing.
Oh, here, let me check here. Participants,
okay.
More. Allow participants to unmute themselves. Start video. There we go. You should be able to try it now.
Yeah, it said still host disabled participants screen sharing.
More. Make host. There we go. Change host. You're now the host.
All right. All right. So
there we go. Wonderful. Okay. Excuse me. I'm gonna hide that window so that the recording can catch this.
Yeah.
So we're looking at Thinkorswim, correct?
Yeah, this is Thinkorswim. Let me open something viable. So you know, these are the options. You understand? So all the time
just to make sure for people who haven't used Thinkorswim, we're looking at the trade tab at the top, and we're looking at the active, the all products for options with the option chain panel open. Go on.
All right. So all the time on the left-hand side, which is this side, that's where the call, strike. You understand? If you are bullish on the stock, you're expecting the stock to go up. It's always on this side. And on the right-hand side, that's where the put is. So in case maybe you're looking at a stock going down or stuff like that, so this is where you just go in and try to do what's the name. And
so a couple things I see. Just above there is the different arrows that show the different expiration dates, right? 26th Feb, 5th March, 12th March, 19th March. So you're looking at 19th March, which is about a month off. So we're looking about a month from there. We're opening that panel. And then the calls on the left are if you think the price is going to go up, and on the side on the right is if you think the price is going to go down. And I'm just doing this for the very beginners who are going to be watching this video later.
Absolutely. So most of the time, you need to always look at the open interest. The open interest speaks a lot. You're able to know that, okay, the number of people being interested in this stock, you understand? So if we all could say, you know, that Plantier went all the way to like $52, $54, sorry. High.
So that's what people are willing to pay right now for it.
So yeah, so like
and the number
right
of
now,
people.
I actually even opened an option that was before the week ended. I played the 30 call option expiring March 19th. Because I believe it's gonna Plantier is it undervalued right now based on certain what's the name criteria I'm looking at, and based on the industry they into, you understand, and this is what's the name they into what's the name defense, they into software, and they helping so many stuff, you understand. I bought this stock right by the IPO, and because I was so bullish, you know what I did? I even sold my stock, even though I bought it at $9 just to buy long call options.
And was that a mistake? Was that a mistake? Because usually you said in the past that you like to only bet options when you have the stock. So in this case, you let the stock go. Is this? Are you reviewing the mistake you made this week?
Like mistake as in what? I didn't get your question.
So I just want to make sure I understand what you're explaining here. So for Palantir, they're in defense, and you're looking at the strike price for March 19th, which is a month away. We're looking at the ask price most recently of $29.75. And what were you saying about these numbers that you're pointing at?
I said I was saying that initially I bought the stock right at the IPO for around $9.60, and I was able to double my money triple my money within a few months. And during the GameStop frenzy whereby it made this stock went high so crazy. So around the $45 mark, I knew that, because sometimes you need to understand what the company is also doing. I knew that there's gonna be a lockup expiration. So the lockup expiration is gonna be up. That is gonna allow people in the company to be able to sell some of their shares. And so that's the reason why we see Plantier right now. Plantier is kind of beaten down. If we check on the chart, let's say 5-day, you can see the 5-day high. It was around $34. You can see it right here. Plantier was able to beat down
way down to 24.
Consistently all the way down here to 24.50. But because I do understand what's the name the science behind it. I knew that there's something like this gonna happen regardless.
So you saw in the news that there was an announcement that there was going to be some employees allowed to exercise their shares. So you knew that the price would go down because by exercising those shares, those shares are available to the public, and so they get cheaper. Is that correct?
Yeah, exactly. So
that's good.
I was so bullish on the company.
I'm sorry, just to interrupt. I want to make one last point is when that happens, though, for people who buy stocks, that's a good thing because the price might go down, and that's a good time to buy. Absolutely. But we're talking options, so I just wanted to inject that point before you moved on. Go ahead.
So because I was so bullish on the company, and for me, my price target on this stock is $50 to $60 range. That's my price target. I think this company is really, really undervalued based on what they do and stuff like that. And during their earnings, they had an earnings somewhere here. Let me see if the dates could come. Okay, they have an earnings, you could see it.
Yeah, it looked like 2 cents above.
On February 16th. So during the earnings, I did listen to what the CEO was saying, and the CEO, the way he spoke, I really liked it. He was speaking what I wanted to hear, and he said, "What's the name? We're gonna make sure we cover every company that is within our reach," and that was very,
Encouraging.
very energizing to hear that. So for
Yeah.
me, because I was so bullish on the company and I knew that I did triple my money from the IPO, I could have just left the stock. I could have just left it, but I said, you know what? I wanted more exposure. I told myself I wanted more exposure and more, what's the name?
More risk.
More leverage towards the
Oh
company.
yeah,
So what's leap
leverage.
options? So leaps are like buying options a year away or 2 years away. You could buy it up to 3 years away. But I bought 2022 and I bought 2023.
And
Leap
so
option.
the $45 price, you had the stock for a little while. Is that a
Yeah.
price that you saw your trend lines going towards? Is that what?
No, the stock actually went up. I'm gonna show you this right here.
Yeah, let's see it.
It's called
Let's see the
face
historic.
and highlights. All right. So if we look at over here,
The 52-week high.
the 52 weeks high was $45. It
So
did
there's no
touch the
reason
40.
why it couldn't go there again.
Yeah, there's no reason why. There's no reason why. And the reason why the stock is down now is because what's the name? The lockup expiration is up, and people who invested in the company 20 years ago, 10 years ago now have access to, get some funds. And believe
Hmm.
me, whether it's one thing I understand in trading and investing is like it's just like you are a farmer. You just take it as you're a farmer when you cultivate stuff or when you plant seed, and when the seed grow, what do? You have to sell the fruits, right? If
Right.
you don't sell the fruits, eventually they're gonna perish. So I use
Right.
this simple language to tell everybody. Sometimes when we what's the name, we trade these penny stocks, and then one of the mistake I see some of the people in the group do is that many people become attached to these stocks. Like, these are
Right.
companies, and you got to understand that there is two different scenarios. If you are investing, is different from trading. Trading, you in for to make a quick buck in order for you to do whatever you want to do. But if you are investing, you are in it for the long haul. You are investing, you're doing anything not maybe not less than a year to maybe 3 years or 5 years. Everybody have his investing
More of a
style.
more of a
But
belief in the
if
company.
Exactly. But if you are trading and then you know that you're in a company, you made over 200, 300%, and all your mindset was, oh, I'm trading this stock. If you're trading it, then why do you have to be in there? You paid. Take your money and
So
don't let it
so
be there.
a great example of that for me this week was QS.
Yeah.
QS was one of those ones where, everybody's like, oh, quantum's great, it's going to go to
Yeah.
100. Well, I
Mm-hmm.
bought it back in December and watched it sink down, and I was down hundreds of dollars. And in my case, I
Exactly.
have a small account, so hundreds of dollars is a lot.
Yeah.
Percentage wise, it was a big percentage of my account. But then it came back, and then you saw this week, it had a great rise. I got
Yeah.
my cash back, and then I also the next day rode that second wave that it had, that little residual
Exactly.
wave before it went
Mm-hmm.
back down, and I made. But now I don't care about QuantumScape anymore. I'm just,
Exactly. I
it's in
also
the rearview
I was
mirror.
actually also in QuantumScape, and believe me, when I saw QuantumScape, it's right here.
Mm-hmm.
QS.
Mm-hmm.
This is
There
it
it is.
right here. When I saw QuantumScape at the time before it was the name, it
Before the
went
Wall Street bets
IPO'd,
and
because I
yeah.
think it was through a SPAC. And during that time, I saw the stock really, really cheap at the time. And I'm like, oh my God, I was supposed to get this. I saw QuantumScape went all the way to $80. And believe me, I felt so bad. I'm like, damn, I didn't get this stock. So
Little
when the
miss out.
stock crashed,
Yeah, little miss out.
that was the time I was able to get in. I was like, wow, this is good. Even though QuantumScape doesn't have any product and stuff like that, but what I
Mm.
understand is that many people buy in the future. And when we trade in it, this is a huge advantage for us, because the people who invest in, they are investing for the long haul. We, the people who want to trade it, when we go in and then we make our money, we just get out and we use it for something,
Something
good
else.
for
We
the
move
long
on.
haul.
Yeah, we move on to the next one.
Exactly.
And
So
so that's
we
an
have,
important point to bring up, is, and that goes to kind of one of the first slides in my presentation,
yeah,
which is, you know, what what kind of trader are you? Are you a day trader? Are you a scalper? Are you a
yeah,
long trader? and that matters here. So, you know, in a case like you were saying, for if you believe in a company like Tesla or Apple or something like that, that makes sense to put into your long hold account. I have mine in Schwab.
Yeah,
You know,
absolutely.
and
Yeah.
so those are ones you're just going to buy. You're maybe buy more. You're just going to sit on them and sit on them. You know, those are the ones you're going to retire on. And those
Exactly.
are generally big name companies. But, you know, companies like these Wall Street bet kids are going on, like, oh, Nokia and AMC and GameStop. And, you know, like you were saying, there's a lot of passion behind it, and they believe it and they want to hold it just because of whatever that belief is. When, you know, really the reality is, it's like, that's fast money that you should just take and walk away from and not get attached to the ticker symbol. Maybe come
Absolutely.
back if it drops, and be
It
ready to
drops and then you pick it. Like example
pick it
was
again.
BNGO. Like, you
Oh,
know,
this is a great
if you
one. Yeah.
yeah, if you remember BNGO, like we bought this stock around $1.80, you know,
This is back
because that
in
was
like
when,
November or December, right?
yeah, around December, because the stock, look at its lowest was 25 cents and the
Hmm.
stock went all the way to $15.
Look at that range.
And I quite remember the stock came on my radar around, what's the name, $1.50. But by then I was still researching and try to be comfortable with the company and know what is going on. So on
Hmm.
Twitter, I saw one of the analysts of ARK Invest send out a statement that he wanted to reach out to the CEO of BNGO. And at the time they were still under FDA approval. They didn't get the FDA approval yet. They were on pending. So that was the time I started researching about genomics and stuff like that, and I was getting different tips and stuff. And I heard many experts in the news were talking about, in order for we to combat this COVID, we have to be able to implement genomics and stuff. And I saw that, wow, so genomics is going to have a huge play. And ARK
Hmm.
Invest CEO Kati Hood herself said, they asked her which stock is like the best in her portfolio, and they said they know that it's Tesla. And she said no, Tesla is just a small piece of it, but the one she thinks is gonna triple her company was the genomics. So, you know, listen to somebody like her. She's an expert. I'm not saying what's the
Hmm.
name, because in this industry you could learn things from artists, you could copy artists, and you could also put in your own research into it and then be comfortable
Right.
with whatever you know you get. That's one of the things that is very, very interesting. Actually, in business, you could copy somebody fully and still be profitable, or just tweak some little stuff. So,
Right. So
in
you bring
terms
up a
of
great
research,
point, and that goes back to trading styles too, right?
yeah, yeah,
Yakubu, you do a lot of research.
exactly,
I don't. I don't really
exactly.
these companies. It's
Hmm.
just like, what is the company? What do they do? What's their
Hmm.
price, and what's the chart movement? Um, you know, I should do more research, but
Hmm.
I think you point out an important thing, is that you don't have to do a lot of research. A lot of people are doing research for
Yeah,
you. You know, in my case, I listen to you, of course, because you're doing this
yeah,
research and you have kind of a broader mind for this stuff. But, you know, like I'm going to show in my presentation here, there's this guy Mark Alerts that he just has a style that I like. He's a guy on StockTwits, and StockTwits is, you can find some bad apples, but you can find some good ones, and I found he's a good
exactly,
one. He
absolutely.
published he published a really good trading PDF that I've included in today's presentation that I was going to
Hmm.
share with everybody some here. But the point I'm making is about trading styles, and just,
Yeah,
you know, you can be a heavy researcher, and that's great, or you could just, you know, go with the rumors and the buzz on StockTwits, or you know, perhaps what we hear in the group. I've been very successful by going on what I hear in the group. So thanks for that.
and that's what it is. Actually, right now that investing is being democratized. If you, all you just gotta do is to be very, very observant with the things surrounding you, and
Hmm.
you know, and like research doesn't even take you, what's the name, you go on Yahoo Finance, you could get great amount of information at your doorstep, like right there on a silver platter, without even doing so many things, digging in the 10K and stuff like that. Many people would get this for you and highlight everything for you.
Yeah.
That being
So
said,
and
it's
and
just
I think that's the reason like a lot of us use like Stocks Alerter and the
yeah.
signals generators and stuff because
Mm-hmm.
they have the systems all set up to monitor lots of these things. So
Absolutely.
we'll go into some of that stuff, but for the time being, I want to get back to the options and how we
Yeah.
were picking the strike prices.
Okay.
Keep the conversation focused here.
So we were talking about what's the name? Plantier. So
Palantir.
to me, what is the name? First of all, you need to be able to be comfortable with the company. Like I'm very comfortable with Plantier, and I know that from now to March 19, right now the stock closed at what's the name 1973. Right now 1975. So it's hitting what's the name $30. It's easy. It's easy. You understand?
And so when you say and that's that column strike. That's those that ascending number 23, 24, 25. So $30, which is only 25 cents away from its current
Exactly.
ask price.
Absolutely. So right now you're paying what? You're paying 345 just to be able to buy what's the name Plantier at $30. And you don't necessarily have to exercise it. You could just decide to, I just want to take my profit. That's it. You could decide to do that too as well. There is no right or wrong. So you just gotta look at what you think you're comfortable. If you believe Plantier is still worth it in the future, then you could decide to buy it at this price and leave it in down along the line, maybe 3, 4, 5 years, and maybe this could turn over. It could do something great, and you
Mm-hmm.
know they
But
have a
right
lot of
now, we're focused on the 19th of March, which is a month away. And so you think that the price is only going to stray about 25 cents between now and then, and you think it's going to go up. That's
yeah.
why
To
we're
me,
looking at this
I think
rope.
it could go up, but anything can happen. Actually, right now the markets we have so many fluctuations going in the market, so there is
Right.
nothing guarantee about that. But you just have to have your bold conviction one way or the other, just to feel
So
comfortable.
you
So
having factored in volatility and everything, you've made your decision that $30 is the price you want to go with.
exactly, yeah. To me, $30 is the price I want to go with. And if you
And
want, you could just go down a little bit more and buy the 29. Is that you just pay like a few cents more, but it's still what it is. But I
so
have a month to go, so I have full conviction that this will materialize eventually.
so that's a question right here. So the ask price is 29.75. If
Yeah,
I think that in a month from now it's going to be $29, like go down slightly, I
yeah.
would want to purchase a
Buy
put
the
right now,
put.
right?
Yeah.
But
So
if I
that one
thought it
you
was
go
going to go
towards
to,
this side, and then
mm-hmm.
you buy
but
the
if I thought it
put.
was, but if I thought it was going to go up slightly to 30, maybe even to 31, if it's doing well, that's when I
Yeah.
would go to the call side and start picking from that side. And is that why the highlighted areas in those grids is kind of darker?
Oh no, the reason why this is highlighted, this
Mm-hmm.
means whatever is highlighted from up like this, it means in the money, meaning the stock is in the money. Like you understand,
Mm-hmm.
like $29, the stock
Yeah.
is already at $29. So you buying it at 29, it shows that this is already in the money. So the moment you buy it,
Mm-hmm.
is gonna be in the money. You understand? So if it more goes up, then that's good for you. You already bought it in the money. But for me, this is out of the money because I'm buying. Over bullish. I'm over
Yes.
bullish, and I believe that the stock could hit $30, and so I'm buying out of the money call. But
And
the out
for
of the money call.
and for
So
new
if you look
folks,
at over here, the out of the
this.
money calls, they're very very cheap. Look at $30 is like $1.40.
Mm-hmm.
$40 is
But but
$1.38,
the
and
but that just shows that it's more risky. Like it's less likely to
exactly.
go to that price,
Exactly.
and
It's
so
very,
it's
very
cheaper.
risky. That's why I try to be around here, even though it's expensive. Some stocks are even way very, very expensive, and not everybody could decide to, pay this price for that. Some people think, oh, let me go for the $1. But remember, this is an option. You could lose it. You could lose
Right.
everything
You
without
still
even
have to
having
have $156 to cover it.
exactly. So
But
you could
in
lose
the
that
case of
$156
and
without
it's and
having
it's
anything.
and it's more likely that you will because of how far out of the money it is.
Exactly. And based on the way the market fluctuation goes, you cannot tell what is going on or what is not going. So
Right.
for me, I already told you I already have leap options. I have options expiring on what's the name? 2022.
2022, yeah.
Yeah, January 2022. I have a $50 call option. I bought it way when the company was around it was trading around $35, $36. That was when I bought it. So technically
you can,
I'm kind of down now on that, but I have more time. So my advantage is that I have more time if the stock does good, and not just that, I also have 2023 as well, the call options. And you can look at over here the interest. We have over 11,258
yeah.
people
So that's,
interested in the company.
there's that many people that think that in the January 2023, the strike price is going to be at least $50.
Yeah. So with that one, you could be able to have a lot of upside potentials based on the price you're trying to buy in. So to me, I just
And
bought
so,
this. I bought it at 12. I bought this 2023. I bought it at $12. Right now it's 11.30. So it's not. It's just about what's the 30 cents away, because what the reason why I didn't get bent so far is because of the time. The time is
right.
huge. So buying it at the time, you can see that the market is even, valuing it. So I just lost 30 cents on that. So,
Right.
but
And
I
so
have a lot of contract.
that was a point I was going to bring up next, is about time. Is like this whole thing about options and these time frames is like, it's a belief that you think, or these people, these 11,258 people think that 2 years from now, which is
That,
nobody can predict, it's going to be $50 or higher. And
yeah.
11,000 people have thought that. Now, as time goes on, that may start to change. So explain what happens when that starts to change.
Yeah. So yeah.
Like let's say that everybody, these 11,000 people are confident that in 2023 it's going to be, $50, but in 2022 something happens to the company and suddenly it's not going to be $50. What do you
Yeah.
do?
Yeah, I mean, if you're still bullish, you could leave it. You could leave it because you have time and you don't
Mm-hmm.
have to worry about it. You understand? You still have time with, and also I'm gonna also show you guys the delta. I'm gonna add the delta
Yeah,
right
let's
here.
talk about
Let's see what I
those
can.
those Greeks, as they call them. Delta. There was some talk about theta a bunch this week, so maybe we can touch on that for a minute, but later.
So you see, I just added the delta. So the delta here means, if let's say this is 2023, if you want to buy this stock for like $30 and you believe it's gonna hit $30 by 2023, so you paid 14.90 for the call, and if the stock move every point, meaning every point the stock move up, you'll be making 75 cents in both direction. If the stock moves down 1 point, you'll be down 75 cents. And remember, every option is times 100. So
Right.
meaning 75 cents times 100. That's the fluctuation.
$75
Yeah,
for your one option that you're holding, which is
exactly.
100 shares.
Mhm.
It's going to go up or down $75 for each
So
tick.
exactly. So that's how it is. So depending on the number of contracts you buy, that's gonna show the fluctuation on. and
Mm-hmm.
and if let's and if you very very bullish, that's why it's good to be right at the money. So because this, if it moves, you're making good money and stuff like that. But
Right.
this, the reason why I just did this, I just did this because I bought it. Look, I'm gonna be getting just what's the name, 62 cents. And
Mm-hmm.
for me, I'm good with 62 cents. I understand that I don't want to have so much exposure in case I'm
So
just gonna be down
so you're
$62 here, and
so
to
that's
me it's
about
fine
two
for me.
thirds. So 60, your threshold there is about 60. That's about, a little less than
Yeah,
2/3. And
exactly,
that's the maximum exposure you want to give yourself.
exactly. Yeah.
And
So
so
to
lower
me,
than that is more exposure, less than that is less exposure. Or I'm sorry, the higher
exactly.
numbers are less exposure.
Yeah.
And just really quickly, what's that column, 2 columns over, that's got like the Z, P, P, Z, N, all those letters? What do those letters mean?
Where?
Uh, where your arrow is, go over to $11, and then there's an N, and then there's 11.30, and there's a Q. What do those N and Q mean?
Actually, I don't even know about it. I don't know. I
Okay,
think
no,
it's
okay,
just
Forget
it's just yeah, it's nothing important. I think it's just a coding that indicates
coding. Okay,
what letter it is or stuff like
I
that.
wasn't
Yeah.
sure if it had any significance. It doesn't.
No,
Let's
no,
move
no,
on.
no, no, no.
Let's
I never
continue.
look at that. I never look at it. I think, you know, you
Okay.
remember we have what's the name? This is a software. So sometimes in order for them to identify certain columns, they need to, you know, put some identification on it. So I
Sure.
think that's but I'm gonna research it and see if maybe what I'm saying is right or not. But I
We're
never
down to
pay attention to this.
We're down to 10 minutes on this particular Zoom. I will start another one since we're on a roll here, but I want to make sure that I flash the disclaimer towards the end. So just before the Zoom ending is going to end, I'll stop you.
Yeah.
But we've got about 10 minutes. Go ahead.
All right, sure. So that's just being said. We have 699 days away, and the 2022 is 448 days away. But the reason why I'm playing this
Next
what's
month.
the name, March 19th, I'm trying to swing. I'm trying to get some of my money. I'm trying to, you know, raise capital to be able to do what I want to do because I'm over bullish. So in order for
So you
me
want to
to
do something that
reduce.
moves quickly, that you don't have to wait 2, 3
Exactly.
years
So
to
I'm
see
trying to
what it's
make
going
some
to do.
cash on this real quick, and based on what the market is going on, you know, like if you focus on the momentum, you could see that most of this stock, like PLTR, QS, and what's the name, Fubu. If you
Yeah.
if you steady, when they go down, they just come right back again. They go down. So some people, this is a buying opportunity for them, and some people, this
So
is
do you
also
buy
a selling
options?
opportunity.
Do you buy options in the dips too? Like
Yeah.
I know that as a stock guy, I wait for the dips and then I get in
Yeah,
because the price is low.
and
So
right now, what I'm doing most of the time, sometimes I just buy the stocks because, like Tesla, like this, even
mm,
though Tesla kept dipping, sometimes if you're not very, very experienced with this, and you could just say, oh, this is a dip, let me buy. You never know, it could keep dipping and keep dipping. So, like
yeah,
with Tesla,
QS did that
I
to
did
me.
similar thing, and I lost significant amount of that, and I'm trying to also what's the name, maintain that threshold and build myself up above it. So I just do that as well. And sometimes, like when a stock goes down like that, it's better to just buy the stock, and when it goes down, you just dollar cost average it compared to buying the options. And remember, options are high risk, high reward. So
Well,
if
I think that having the stock and because you can see the most, you're already kind of monitoring which way it's going, so that's
yeah.
helpful.
hmm Yeah, so like I always tell the reason why I also most of the time I own these stocks is because it helps me understand the volatility of the stock itself and the price movement, because all the time I'm able to see how the stock is moving, and I'm able to understand its resistance and how it fluctuates within my account. So whenever I'm behind the screen to make a decision, I'm very, very comfortable with whatever decision I make, because I believe this is how the stock is moving, because whatever the company is doing, that's a different ball game. But whatever the
Mm,
stock is doing, that's what that's where my
right.
interest lies.
We're focused on momentum of the stock and not necessarily the company's fundamentals. So
Exactly.
let's talk about like how far in and out of the money do you venture, right? Like how deep would you go out of the money on your calls there? Like would you go
So
past
that's
maybe
what I'm
4 or 5?
saying. Most of the time,
Mm-hmm.
it depends. Let's say, let me open Tesla over here for you.
Mm-hmm.
So a stock like Tesla, you understand, you know how Tesla is very, very expensive, and based on
Yeah.
how it is, not everybody's
So
willing
if you
to
had to buy
pay.
100 shares, that would cost you uh, seven $72,500,
Yeah, but
right?
you don't want to buy it at this low. Tesla is around 700 and something, and you don't want to
Well, you
go
have to have
and
that much in your account to cover it, is what I'm saying.
exactly. So you want to go at least, you don't want to go this low. Like
Well,
it's too.
I certainly don't have, what is
Yeah.
that,
So like
$125,000 in my account, so I couldn't afford some
exactly.
of those.
So for me, like Tesla, like this 800 core, yeah, I can decide to buy one contract on that, and that's gonna cost me about, what's the name, $4,000, and I'm
Yeah.
fine with it. You understand? So
If you
I'm
have
fine
that,
with
if
that.
you have that budget and you're willing to risk $4,000 on this,
Mm.
you can go that deep.
Exactly. So to me, like 800, at least I skipped to 1, 2, 3, and 4. I'm comfortable with this. I could
Mm-hmm.
buy it and I have time because and remember, Tesla is one of the company, its volatility is above the roof. When it's gonna, like, you could buy, like, I've bought certain some Tesla call options. This
Mm-hmm.
are like when we talk about the ghetto options,
Mm-hmm.
I could go
Mm-hmm.
all the way to like $1,000, and I pay cheap price. And when the stock is on the uptrend, believe me, you could flip this one to maybe 6 or 5. And but you gotta be very, very attentive. The moment it hits, you
You
need to
have to be
just
kind of looking at it and monitoring it and ready to act on it.
exactly, exactly. And during that was then in that movement, because of the options is also measured in with the implied volatility. So if the implied volatility is in the upside, you could make more money. This $1,000 call option could could double and even give you some nice change. And but
Where
if
do you look for
not,
that? Where do you look for that implied volatility?
what's the name? The implied volatility, you could attach it to your, what's the name?
You can put it in a
What's the
column.
name? Yeah, so right here you could go to customize
Mine's
and you could add MI, implied
interval.
volatility. So
Go ahead and add that because let's see what you look for in that
yeah,
column.
so you could see here, you could see we're looking at the $1,000 call options. You could see here it's telling you 57. The implied volatility is around
What's the
57.6.
number you're looking for?
That's what I'm saying. I don't have a specific number. It depends. Every stock has its own threshold to deal with. So depending
Okay.
on what every stock, like we just spoke about Plantier earlier, and
Mm-hmm.
Plantier I just went 30 cents above the initial price, which was $30. But bear in mind, I bought that 30 call option when Plantier was trading at $26. You understand? So right now I'm
Mm-hmm.
almost I'm already in the money. You understand? I'm making some
Right.
money
So
on
you're already in green territory.
exactly. So but with Tesla is very, very expensive, and not everybody could decide to afford $4,000 just on one stock, on
Mm-hmm.
one contract. Somebody want to swing like the way we spoke. You are you a swing trader? Are you a this? You understand? And look
Mm-hmm.
at
Mm-hmm.
here, the delta. Look at the delta over here. The delta is what, 0.07. It.
Is that good or bad?
Exactly. So it's very,
No,
very bad. And if
I'm asking you, is that good or bad?
it could be both ways. It could be both ways. Like this $1,000 call option, if it
Mm-hmm.
goes down, believe me, you could lose this within a second. This could
Oh,
go to cents. Like, yeah.
okay.
So it
Delta is the
favors
amount
both
of
sides. It
right. So
favors both sides. You understand? It
mm-hmm.
favors both sides. So that's just what it is. It favors both sides. So you can,
Understood.
because basically if I want to buy this $1,000 call option, I'm not buying one contract. I could buy like 10. Instead of
Right.
me spending 4,000 to buy one, I could spend that 4,000 to buy 10. And if I'm right, then I could
It's a
double my money
multiplier
as
of
quickly
10.
as possible. You
So
understand?
just really quickly on that implied volatility, is a higher number better or a lower number better?
That's why I'm also trying to tell you, if you want to fixate it on one unique number, you will end up always hurt because every stock has a
I'm not
different.
necessarily trying to focus on a particular number. I'm just trying to
Yeah.
understand what those numbers tell me. If an implied volatility is lower than 50, is
Yeah.
that better than
So,
if it's
okay, the
above
implied
50?
volatility, let me give you a quick scenario. If implied volatility is high, mostly you don't want to buy options, you want to sell options because then it's a what? It's a seller's market. You remember the options are made between two parties. So
Yep.
people who go here, there is somebody who is selling this option to you, then you want to buy it. You understand?
Mm-hmm.
There's somebody selling it. So if implied volatility is high, you want to do what? You want to sell it. Like I want to be the guy on the bid. You understand? I want to be the guy
Right.
over
So
here.
implied
So
volatility is the number of people standing in front of the guy asking to trade and who he's going to pick. You want it to be you,
no, 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 no,
right?
no. So it's just a measure. Implied volatility, we use it to measure the stock volatility. So it's used to measure the strength of the stock. You understand? So
Mm-hmm.
you use it to see whether it's who has the ball. It's about who has the ball in his court. It's about, okay, I want to buy this $1,000 call option. Is it worth it to, buy this? Or if maybe I have 100 shares of Tesla, I could decide to, you know what, I could just sell this and make some money. So here I'm not paying. If I do this, meaning they're gonna